what I want to discuss is those sectors that reflect economic growth or contraction. So you get housing, retail, the banking sector, basic materials, transportation. So let's rifle through a few of these and let's see what we can find. And at the end of this little discovery period, we'll see if there are reasons to get really aggressive in any particular sector. So let's start off with housing. All right. So let's start off with the XHB. Okay. Now it's the S&P Homebuilders Index. Not a very pretty picture. Moving averages, the 50 is about to cross the 200, and we know that's sometimes not a signal to do anything but watch. But anyway, the XHB broke its trend line, uptrend line. This was in June. Rallied back to it, failed from it, and now it's starting to look like that other chart, the GE chart, where things are just toppy. That's all there is to it. They're toppy. And this rally last week preserved, that is, it failed, and preserved a series of lower lows and lower highs. So the XHB is telling me be careful of the home builders, right? Now, if the XHB gets through 1378, makes a new low, we should figure it's going lower. But let's look under the hood in the XHB. All right, first let's take one of the housing stocks, RYL. RYL looks awful. It looks awful. I mean, it had its crazy rally where it whipsawed all over the place, but pretty much when it got up to 25, it trapped everybody. Then it took out the uptrend line at $20, $20.50, and it's just had a stair-step decline, beautifully strong downtrend since then. And here we are, or here it is, staring at very important lows around the $15.50 to $15 mark, which, if broken, could unleash some pretty serious downside follow-through. So let's go over to the weekly, see what this weekly looks like. So the weekly is telling us that RYL probably go back and test the lows. It's a pretty ugly looking chart, and look at where it came from. So yeah, it's really cheap, but it's in a sector that seems to be still under pressure. And if anything, if it tests these lows and holds and rallies off of $12, then we'll look at it and we'll say, well, maybe, just maybe, that group is building a base. But for now, RYL is very dangerous. All right, so that's an example of a housing stock that's telling us that the housing sector is not particularly in a position to help the S&P or to give us optimism about the economy. Let's take another one, Lennar. Okay, now Lennar might be in better shape than RYL, technically, but it has its issues technically as well. All right, so RYL looks like it wants to retest the lows, the July lows, 13.5. It doubled over. It couldn't get back above the prior rally peak last week. That is the prior rally peak from the June rally at like 16. Doubled over, and it looks like it's headed to test the lows, 13.5, and the trend line, the longer term trend line from January or March, I should say, of 09. That would be at about 1270. If that breaks, then you have a top in place, and if it doesn't hold 1150, it's going even lower. So Lennar is not as negative looking a chart right now as RYL is, but it's not giving me all that much optimism that the housing sector, depending on which component you look at, is in a position to lift the S&P or to provide optimism that those economic data points and the deflationary type of feel they have are just short, or are really short-lived, or will be short-lived. That is a brief pause in economic growth. Something tells me this is not a brief pause. This is going to turn into a double dip. to use a cliche at this point. That's what the housing charts are telling me. All right, so let's look at one more in this sector, in the home builders sector. All right, so let's go over to Home Depot. All right, so Home Depot is the flip side of the housing. So people aren't buying homes, but they're fixing up. They want to fix up and do all the home improvement work. That's what Home Depot would be telling me. If Home Depot was looking great, which it is not, as you can tell, it would be telling me that the contractors are doing well at Home Depot and that there's a lot of home improvement work to be done because people the people are putting the money into their houses, they're not buying new ones. Right? But that's not the case. Home Depot looks very dangerous. And it looks like a major top is starting to break down in Home Depot. So should Home Depot break like this 27 level, then you get into the 24, 22, 80, 24, 50 area. So let's go over to a weekly and see where that fits into the larger scheme of things. We'll widen this out. And so here's the weekly chart on Home Depot, and you can see that all told, it's a dangerous looking chart. And Home Depot, who knows where Home Depot could go. Let's look at this peak that occurred in April. Right? Now, it just so happens that the prior highs now we're talking about 2004, 5, 6. And then you connect this trend line. So the highs in 2006, 7, and 8, or 6 and 7, I should say, created a trend line that capped the rally between March of 2009 and May of 2010, and now you're coming down again. So Home Depot is not, for me, it's not an indication that, okay, here's a company that's showing that the economy isn't so bad. I can't say that. So Home Depot is saying the home improvement side of the housing business, or the home owning or the home building business, that's no good either. That's not doing too well either. So the home buyer and the home repairer and all the businesses and all the employees and all the contractors that are dealing with home improvement, they are feeling the effects of what Home Depot is showing us. So let's cross the home building sector off the list of potential areas where the economy could be showing us some glimmer of light at this point.